Hello and welcome to the look ahead for, it's actually for March the 4th. So forgive the incorrect date there. But with me, Fiona Cincotta, Senior Market Analyst at City Index. First of all, we're just going to pop over to the risk warning. I'm just going to ask you to spend a few moments reading through the risk warning. I'll pop myself on mute whilst you do that. Okay, excellent. So let's kick off. As we usually do, we'll have a look at the City Index economic calendar, and then from there we can go ahead and have a look at which markets we'll be watching and any trade setups that could be looking possible ahead of those major releases. So we kick off on Monday with the Japanese yen will be in focus, and the Nikkei. We've got Tokyo Consumer Price Index. So this is actually, although it's the Tokyo inflation data, it's actually almost as closely watched as the actual Japanese inflation data. And I mean, this is going to be, I think, very much in focus this week, given the comments that we've had from the Bank of Japan Governor Kazuo Ueda today, and the Bank of Japan board member Takata yesterday. So just to refresh your memory, yesterday we had Takata saying that it was potentially about time that the Bank of Japan should consider discussing a move away from negative interest rates. That sent the Japanese yen sharply lower. If we go, here we go, bringing up the chart here, we can see that just here. This is the candle yesterday. And then today we've had Bank of Japan Governor Ueda saying, actually, we're not quite there yet. We still need more confirmation that we're getting to that 2% inflation target. So given those sort of contrasting views that we've heard, the yen's been on a little bit of a roller coaster between yesterday and today, but it does mean that I think the markets will be even more focused on what inflation is doing and the broad health of the Japanese economy. We know the economy actually tipped into recession. As far as inflation's concerned, it cooled in the latest reading, but not as much as expected. So it is proving to be a little bit sticky. So that's going to be the main focus as far as the yen is concerned. We can see the yen has been trading pretty much in this, you know, it's relatively well contained in a familiar range right now. It had been around that 149.50. On the downside, that was the mid-February low, and on the upside, we've got this 150.90, which is the 2024 high. Now, as I said, we did get this slip down lower, but look, we've got that long lower wick on the candle, which suggests that there was little selling demand at those lower levels, and we did see that close above the 20 SMA. We're still seeing that hold above the 20 SMA, which I guess is slightly encouraging, but buyers are going to need to break above that 150.90 level if they're going to get in a higher high and extend that sort of bullish run up that we've seen since the start of the year. If we do get a break above that 150.90, then we'll be looking for this high here at the 150, at 150.90 in the 2023 high, which is also a multi-decade high. As far as support is concerned, then, I mean, and it's also worth mentioning here as well that there is a lot of US data coming out next week as well, or a lot of US catalysts. So obviously the yen will be focused on what's going on in Japan, but also you've got what's going on in the US. So that's just worth mentioning. But on the downside, you know, sellers, if they're gonna look to take out that 149.20, which is the weekly low, and if they can break down that, that'll bring this level into focus, which is the 148.30 level, 148.80, sorry, which is the January high. So let's crack on. What else have we got going on next week? So we've got China services. Okay, this is going to be interesting because we had some data from China today. Obviously, the focus is very much on the fragility of the Chinese economic recovery. And data today was very mixed. We saw that manufacturing activity contracted for a 5th straight month. While services are actually holding up pretty well. So the market is going to be looking for services to sort of be holding above, comfortably above that 50 level, which separates expansion from contraction. I guess here we could be looking at the US dollar, Japanese yen as a way of sort of accessing, sorry. Just let's type it in properly, shall we? There we go. So here we go. We've got the US dollar, Japanese yen chart just showing up here. It's really interesting because I mean, it looks a little bit of a mess, but if we look at this falling trend line, this is the one that goes all the way back to 2023, start of 2023. Okay, so. And we're below that falling trend line at the moment. We're below the 200 SMA. The Australian dollar does seem to have found some support around this level, the weekly low, which is just below the 0.65 level. That seems to be offering support so far this week, but it's a 2-week low. Okay, so we're finding a little bit of a move higher. Buyers are going to be looking to take out this level here, which is around, it's also the 20 SMA. It was the Thursday high. It's a level that if we just have a look across the year at the with 125, sorry, 0.6520, it's sort of offered some support and resistance at several occasions across the past 12 months. But as far as real resistance is concerned, also the 200 SMA there is at 0.6560. That's also the confluence of this this year-long falling trend line. So that's probably going to be proving to be quite a tough nut to crack. If buyers do manage to get over that, then that'll bring the this last week's high into focus, which is just below 0.66. But I think broadly speaking, you know, the market is looking a little bit weak down here. The RSI is below 50. Sellers are going to look to take out 0.65 in order to come through here down to this 0.6450 level. If we take out that, that's going to create a lower low. I think the other thing to bear in mind, just as far as the Australian dollar is concerned, not only have you got the Chinese concerns about the economic recovery, but we've had mixed data from Australia recently. Australia's inflation is cooling. You've also got retail sales, which are stronger than expected. And just recently, we've just sort of getting the idea that the RBA is not going to hike again. So, and that's limiting the upside as far as the Aussie is concerned. Is now the markets, particularly after the RBNZ meeting at the start of this week is more convinced that the next move from the RBA is going to be a rate cut. So let's have a look. Tuesday, we've also got ISM services PMI. I'm just going to draw your attention. This, you know, we're seeing this resilience in the US economy. We had GDP data out this week, which showed that it is still growing. I mean, particularly in comparison to its major economic peers, the G7. And, you know, we're seeing these, if we see sort of this ISM services remain resilient, what could happen though is it could raise questions about whether the Fed is going to be able to move ahead with this June rate cut. We had that inflation, the core PCE figures out yesterday, and the data showed that services PCE rose at the fastest level in 12 months. So that is going to be something that the Federal Reserve will want to keep an eye on. The strength of the service sector therefore ties in nicely with that. But I'm just going to point out what other US data we've got going on this week before we start having a look at the different charts. We've got the ISM services. Obviously, if we get a stronger than expected read there, then that's when we could perhaps expect to see some US dollar strength or some weakness in gold and equities if the market pushes back on rate cut expectations. Also got the ADP data, and that comes ahead of Friday's non-farm payroll report, a key report to watch. Also, we've got Federal Reserve Chair Powell testifies before Congress in a biannual meeting. This is twice this week that he will testify as well. His comments will obviously be watched very closely for any clues over the health of the US economy, inflation outlook, interest rate outlook, and the big question, when will the Fed start to cut interest rates? So we've got that on Thursday, and then on Friday we've got the non-farm payrolls, as I mentioned to you. So let's just start by taking a look at the NASDAQ. Obviously, the NASDAQ has just risen to record highs in yesterday's session. The record highs were reached after investors digested the inflation data, which cooled in line with forecasts. Core PCE slipped to 2.8%. And so that's just fueled optimism that the Federal Reserve's next move will be the rate cut, and also sees the market more convinced that the next rate cut will be in June, with the FedWatch tool pricing in, or showing that the market's pricing in a 70% possibility of a rate cut in June. That optimism over rate cuts, as I said, you know, could be changed depending on what Federal Reserve Chair Jerome Powell says, and perhaps also the strength of the labour market data that we get on Friday is also going to be massively relevant. If we do see, for example, Federal Reserve Chair pushing back on rate cut expectations, then that could have a negative impact on US equities, particularly the tech-heavy NASDAQ. These growth stocks are very sensitive to interest rate expectations. So just having a look here, as I said, we're testing this level here, you know, fresh all-time high there at 18,123, just over 18,120. Buyers are going to be looking to take out that level to push towards 19,000. I was going to say 18,500. We're looking at the round numbers now to push higher, and we can see it's being guided higher. It's trading above this rising trend line, and we've also got the 20 SMA. But you know, just watch out, there is some bearish divergence with the RSI there, so that could suggest that the that the run higher could soon run into some trouble. As far as levels are concerned, on the downside, I mean, if we take out here, we can see here we've got around the 18,830 level. We've got the 17,830 level. We've got the 20 SMA. If you take that out, and the recent low, the weekly low, beyond there, this one's going to be the one to watch. The 17,3. Well, it's around, what is it, 17,314. If we can get a break below there, that will create a lower low and start to bring in these levels here that have been previous all-time yearly highs at the time. So that's the NASDAQ. Just sticking with US indices. Wall Street, it didn't hit an all-time high. S&P did, NASDAQ did yesterday, Wall Street didn't. Seeing a little bit more of a struggle. It hit that all-time high on Monday at 39,250, or just below 250, and it's just eased back slightly since then. It's still trying to find that support on the rising trend line, which is also with the 20 SMA. Again, we've got that sort of bearish RSI divergence going on, so that's just something for buyers to be cautious about. If you were looking to go bullish on this, then you'd want to really be looking for a rise over 13,985 to create the fresh all-time high as a move then towards 40,000 comes into focus. On the downside, support here, I'd say around the 38, just below 38,400. So 38,335. This is the low that we've got from last week's low, basically. So they would be two ones to be watching out for. I won't do the S&P, but we will have a look quickly at the US dollar. Here we go. US dollar has been on this rally since the start of the year, as the market has reined in those rate cut expectations. As far as the market's concerned, expecting around 80 basis points worth of cuts from the Federal Reserve, which is down around from 133 basis points earlier at the start of the year. So, you know, there's been a massive repricing there, which has helped the US dollar up. We've come off the mid-February highs, but we're still sitting above the 200 SMA here. Okay, so that's going to be a key level there at 103.80. We're managing to push above here the 100 SMA as well. So, you know, on the downside, these are going to be the immediate support levels: 104 for the 100 SMA, and then the 103.75 for the 200 SMA. If we take those out, then perhaps we'll be looking at this one here, which is the 103.40, which is last week's low. On the upside, if we find that this 200 SMA really holds and the price can also hold above the 100 SMA there, then, you know, we will be looking for a potential move back towards the 104.50 ahead of that 105 level that, as I mentioned, we saw in mid-February. And just finally, also worth looking at gold, particularly when we're considering the Federal Reserve and moves strengthen the US economy and inflation. Gold has rebounded here. So again, we've seen not so much of a clear pattern in gold at all. I think it's been much more range bound, which has been interesting because we've seen that clear US dollar strength, and yet despite the strengthening dollar, we haven't really seen gold weaken at all, really, in comparison. We did have a slight pullback down towards that 100 SMA, recovered. It is now pushing above this rising trend line, which dates back to August, so summer last year. Just trying to push above that right now as we speak. If we do get a move above that, that I think will be quite bullish, and then we'll be looking at this 265 level, the February high, in order to create a higher high. Obviously there is this rising trend line support around the 240 level, below there around the 2010. That's going to be sort of around the level that it's also worth keeping an eye out, which again, as I said, it's a level that has been quite important in previous moments over the past few months. Right, so what else have we got going on? Wednesday. So we've got retail sales in the Eurozone. We've already talked about, I'll move on to, I'll look at the Euro and the DAX shortly, but because we've also got the ECB rate decision coming up, but that's on Thursday. So let's just stick what we've got going on Wednesday. We've also got, which isn't on here, the UK budget, which is going to be a really interesting one to watch. It's the Chancellor's budget. It's obviously the last budget ahead of what we're expecting to be an election year, with an election probably coming in the autumn. And so, I mean, there are a couple of things to be watching out for. Obviously, we've got the OBR GDP outlook for, so growth outlook for the UK will be watched quite closely, as will its inflation expectations. But let's not forget, this is, as I said, a key budget, because the Chancellor, being election year, will want to, or would like to, we imagine, start playing with taxes a little bit, starting to cut taxes in order to perhaps win over some votes. So, I mean, basically the UK economy, as we know, it tipped into recession at the end of 2023. Although the recession is not expected to last long. In fact, the Bank of England have already suggested that the recession in the UK may already be over. I mean, we've seen PMI data come in relatively strong. So I mean, that is something to keep in mind. Perhaps one area to be watching will be income taxes. I mean, there's so much that he could do if he has the wiggle room, basically. We don't really know. Jeremy Hunt's got the wiggle room in order to be able to cut taxes. If we remember back to Liz Truss's disastrous budget, which sent the pound to a record low against the US dollar, what the market doesn't want to see is unfunded tax cuts. So, I mean, as long as the Chancellor can lay out where the money is coming from in order to make these tax cuts, then that should be okay. But I think he probably won't be able to do a huge amount. Also worth bearing in mind that the International Monetary Fund has warned the UK not to cut taxes. The Institute of Fiscal Studies, which is a think tank, has also said that the government shouldn't cut taxes, although they did say without highlighting how they could afford them. So if we did see large tax cuts, I mean, this can go one of the two ways. As long as the market considers that they're funded, then it shouldn't be too much of a problem, but it can be inflationary. So if we do see the Chancellor sort of cutting income tax, or at least moving the threshold to rise in line with inflation, then that would be considered inflationary. It just means people have more money to spend, which could be beneficial for the pound. If it's unfunded and it unnerves the market, then obviously the pound can slump. Other things to be watching for: 99% mortgages, some comments perhaps around inheritance tax, and also holiday lets and childcare. So the housing stocks could also be in focus here. Just having a look at the this is the sterling US dollar. Again, we can see it's been trading in a relatively steady manner around, I think we're just around the 126.50 level at the moment. So I mean, it's just consolidating. It's trading within this symmetrical channel that it's been in really for, sorry, symmetrical triangle, which has been in for some time now, but it's still holding up against the above the 200 SMA, although it has come off the 127 highs that we saw earlier in the week. Look, so I mean, basically we could be looking for a breakout on the downside here at 126, which would then bring 125.75, the 200 SMA into focus, and the 125 level, which is also the February low. Any recovery, any upside, breakout will be looking at around the 127 level in order to test the 127.90, which is the February high. So I'm just going to keep on moving because I'm conscious there's so much going on next week and there just isn't enough time to get through it all. Bank of Canada monetary policy statement meeting, not expecting any interest change in monetary policy from the Bank of Canada. Also ECB, another big one to be watching next week. ECB, we are not expecting them to move from interest rates, which are expected to stay at 4%. The ECB has been really reluctant to talk about sort of cutting interest rates, and we've seen inflation today cooled, not quite in line with expectations, but it cooled from 2.8% to 2.6%. So we are steadily moving towards the 2% target that the ECB wants inflation to arrive at. The ECB have, and particularly Christine Lagarde has pointed out that she's concerned about wage growth in the region, given the tight labour market. And that seems to be what has been holding, or she's highlighting as holding the ECB back from cutting rates. They want to see more evidence that the 2% level can be reached. Now, just having a look at the chart here, we was trading in this downward trending channel. We managed to break above that and the 200 SMA, but that was short-lived. So we're once again back below that 200 SMA at the 108.30 level. That's going to be the key level. If the market gets the sense that the ECB is starting to really talk about when it's going to start cutting interest rates, then that could see the euro drop sharply, particularly against the US dollar, where we're seeing the Fed saying that it still needs more evidence to decide when it's going to start cutting interest rates. If we could take out this low here around, it's the 108 level, that could result in a deeper sell-off down to the 107 that we've got down here. On the upside, the first obstacle to clear will be the 200 SMA at 108.30, and if we get a rise above there, then we'll be looking to test 108. Yeah, 30. Sorry. So the 200 SMA there is at the 108.30, and then if we can get a rise above 108.60, that's the weekly high, and then the February high, which is 109, all the way up to 110 then. On the downside, immediate support is at the 108 level, break below there, as I mentioned, taking us to the 107. The questions, I think that's literally all we've got time for. We do obviously have the US non-farm payroll. I've been through the charts as far as the payroll is concerned. As far as the US is concerned, you know, you'd be looking at the US dollar and your US indices. Jobs growth is still expected to slow, you know, but still at 188,000, still relatively solid. average earnings is expected to drop quite sharply, which could fuel expectations of a June rate cut if it does. If we have a look there, average earnings are expected to fall to 0.2%, down from 0.6%. That would, as I said, encourage the market to believe that the Federal Reserve will start cutting rates sooner rather than later. So that is all from me. If you've got any questions, then please do pop them in the questions box here. Otherwise, you can find me on Twitter, which is, or should I say X, at Fiona City Index. Excellent. Thank you so much for your time, and I'm wishing you a great weekend. See you next week.